Hello class and welcome to the second and last video on the chapter on budgeting. Last video we went through the income statement budgeting, and for this one we are mainly going to talk about the cash budgeting. I'm going to deal with a few other things after that, but just a quick recap on what we did and how this is all working together. Remember, they have to be done in steps. You have to go in the correct order in order to get your budgets to work properly. All starts with your sales forecast, okay? Remember, as I was saying before, that is the most difficult. You're going to take in a bunch of information, a bunch of different sources to get as accurate as you can. Because from your sales forecast, you're going to break it off, and that's what you're going to use to make your production budget. Okay? And it's also going to be used to make your selling and administrative budget. That is also called the marketing instead of selling. Okay? It is also going to need to be based off of your sales forecast. So that was step one. This was 7. This was 2 because we kind of went this way. Okay? From our production budget, we use it to make our materials budget, the direct labors budget, and the manufacturing overhead budget. So as we get all those based off of the production budget, they go into our cost of goods sold budget, which also pulls from the sales forecast. So it's pulling from 2 places. Once that complete, with an arrow here, cost of goods sold budget goes into the budgeted income statement along with the sales forecast and the selling administrative budget. Okay. They all are kind of interconnected. And that's all the stuff that we did last class. Now we are going to use the budgeted income statement, the direct materials and direct labor, the manufacturing overhead budgets, combined with a few other schedules like on receivable and payable collection and payment timing and stuff like that to find out when cash is actually going out of those accounts to make our cash budget. From our cash budget, then we can make projected or I should say budgeted balance sheet then. Okay. So a simple cash budget is shown on slide 24. If you want to pull that up, and I'm sure it's in your book also. So I'm not going to write a full cash budget out. Okay. But to make a cash budget, you're going to have your beginning cash. So say we have 500 beginning cash plus expected collections. Okay. And then you would list all those out. And then minus expected disbursements. To get us to total earnings. 1,000 minus 750. You would have 750 at the end. But you would list out all of your collections and all of your disbursements underneath there. Okay. Like I said, slide 24 will give you an example of that, but common collections or receipts, okay? Collection of receivables. And we're going to do a schedule of receivables coming up shortly, so collections of receivables is a big amount. You have cash sales. Of course, that is collection of cash. Sale of assets. Okay, that could be selling property, plant, and equipment, or maybe you have some marketable securities, bonds, and stocks held in another company that you sell and receive cash for. Okay, that information has to be given. Maybe you receive cash from borrowing, and if you remember, for corporations, bonds is a major form of borrowing, but smaller business stuff like that, you could also borrow from a bank. So any type of borrowing. Stock issuance. We issue new stock as a corporation. Of course, we are going to get cash for that as long as we're issuing it for cash. And then there's a catch-all. There is always another category because you have to use your own brain when you're working through some of these problems. And if you see that cash is coming in, that is a cash collection. For our disbursements, first we have material purchases. So this is going to be our accounts payable schedule that we're going to work through too, that we're going to do after we do a receivable schedule. We have manufacturing costs. So that is going to come from our direct materials budget, our direct labor budget, and our manufacturing overhead budget. We can find out what all our manufacturing costs are. Operating activities. Basically going to be our marketing and selling expenses that are coming from that budgeting onto our income statement. Debt repayment, so this could be when debt matures and we gotta pay the whole amount back, or it could be the interest payments, because remember bonds and most debts come with periodic 6-month semi-annual interest payments. We could buy assets, so maybe we're buying stocks and bonds or buying some new PP&E. Income taxes is another big one. Don't forget, income taxes are definitely cash going out. Dividends, and then the catch-all, there is an other there too. Okay, but those are just a list of some of your common collections and some of your common disbursements that you're going to see on a budgeted cash flow statement. Okay. All right, we're going to do a schedule of receivables now in order to determine how much cash we are going to collect from our receivables. Okay, we were given some information for this. So when we have accounts receivable, we expect to collect 20% of the receivables over here in the first month. It also tells us in the next month we are going to collect 75%. We also are giving a discount of 2% and a bad debt of 3%. So those two combined are 5% uncollectible. Okay, so that's important to know going forward. We are also giving some expected sales amounts for January, February, and March. They were 500,000, 450, and 600,000. Okay, so all this information is coming from our slides, but here's what we know. When we make sales on receivables, we collect 20% of the money the first month, 75% we collect the following month. We give a discount of 2%, so we're not going to collect at least 2% of it. We write off 3% as bad debt for a total of 5% that's uncollectible, and these are our expected sales. This was also giving to us our beginning accounts receivable that we collected in January was 540. Okay, so this is going to be our cash collected schedule. Okay, a schedule of receivable and the amount of cash collected. It gave us that we collected 540 from the beginning. Okay, we don't have any numbers to go with that. That was just given. But then in January sales, we have to figure out in January how much are we going to collect. Well, we expect to sell 500,000. In January, we are going to collect 20% of that. So we would expect to collect 100,000. And I'm going to go ahead and put February sales, March sales, draw a line, total collected would be 640,000 in January is how much cash we expect to collect. Okay, because we're not going to have anything for March or February. It's not there yet. We won't have anything previous over, okay, because everything is either collected in the current month or in the next month. Okay, so for January sales, 500,000, we're going to collect 75% of that in the next month. So we expect to collect 375,000, which is 500,000 multiplied by the 75%, And we expect to collect 20% the current month what we got in February. So 450,000 times the 20% gives us 90,000. Still nothing for March yet. 465,000 collected in February. Get to March, there's nothing there. We're not going to collect any more off of that because we collected 95%. The other 5% is uncollectible. In February sales, 450 times the 75% gets us 337,500. And then the March sales of 600,000 times the current month of 20% gets us 120 for a total in March of 457,500. When you add all of those together, which I did not do, but that is going to get you your total cash you expect to collect for your 3-month period. Okay, from your receivables. So when you're going to go put this into your budgeted cash flow, you'll put collections from receivables, you would add those three together, and that's how much cash you would expect to collect from receivables. Okay. The schedule of payables is the exact same thing, only it just goes a little bit differently because it's payable, so it's a little bit backwards. So our given information is in the current month. We pay 50% of our payables. In the next month, we pay 48% of our payables. Excuse me. We get a discount of 2%. Okay. We were also told that purchases for January, February, and March totaled 120,000, 200,000, and 250. So once again, we'll make our thing up here. We are giving a beginnable that we paid again of 256. So this is a given number 2. Okay, was given on the slides. So we'll go through and we have to do each one again. So our January purchases, we expect to pay 50% of them this month. So we have 120, we are going to pay 60,000. And I do not know why the book did this, but in order to be consistent with the book, it put another category on there, and I looked, and I do not know where it got the number, but I am assuming this would be other given information. Okay, so I have other cash disbursements of 250,000 for each of those periods. It has nothing to do with our purchases. Okay, it is just on the slide. So if you look through it, I wanted to put it on there so for consistency's sake, what it shows in the book. But that is just another given number. Okay. So we have a beginning, which was given January 120. Like 50%. Add all those together. 566 is our total disbursements in January. When we get to February, we are now going to collect the next month 48% of the 120,000, which comes out to 57,600, and we are going to collect 50% of February sales. Add all those together, we get disbursements of 407,600. And then we look at our purchases again. We collect 48% of February's purchases in March, which would equal 96,000, and half of the March purchases get paid for, which would be 125,000. When we add those together, you get 471,000 in disbursements for March. Add all those three together to get your total disbursements, or your total cash out. when you're looking at disbursements, you say cash paid for purchases, it would be that total number. Okay, so you're gonna have a couple problems like this to work through. You have to figure out the schedules, and they'll give you the percents on what they will collect. Write out your charts and take your time. It's just slow, tedious work, but it's nothing too difficult. And that is it for this chapter. All right. So that will cover chapter 13. The next videos we get into, we were going to start looking at variances, and we're going to say, okay, we made a budget. Why was our budget wrong? What happened? Was it because maybe we did the prices wrong? Or maybe was it because they were less efficient than I thought they would be? And we can get into a little bit more details. Okay? So that'll be coming shortly. But go ahead and get chapter 13 homework done and be looking out for the next ones.